The government is looking to raise about 200 billion pesos by 2026 through the sale of state assets, a move to plug the budget gap and fund infrastructure. Among the big-ticket properties on the block, the 129,000 square meter financial center in Pasay, the Food Terminal Incorporated Estate in Taguig, Ecology Villages in Makati, the Mylong Complex in Makati, and a 210,000 square meter National Housing Authority site in Caloocan, and even the atrium in Makati. The government also plans to offload shares in South Luzon Expressway Corporation, Semirara Mining and Power, and United Coconut Chemicals Incorporated. The big question now is, will investors bite, and could these sales reset land values in Metro Manila? Joining us now is David Leechiu, the CEO of Leechiu Property Consultants. Hi, David. Good morning, and thanks for being here with us.
Thank you, Mikey, for having me.
Okay, so the government is looking to raise about 200 billion pesos, maybe even more, depending on the price, by 2026 by selling state assets to plug the budget deficit. In this economic environment, given how the property sector is doing today, do you think that this is a good time?
Yeah, I think this is a good time to liquidate because, the government has so many concerns right now. Minimizing corruption is one, debt payments is one, infrastructure spending is one, among many things. And I think this is a good time to liquidate because we do have a strong need to deploy that money where people need it. And we have to bear in mind that the government is the largest owner of real estate, so they will technically never run out of real estate
assets
to trade.
Sell in this. Okay.
And the whole question is, will it be traded properly and fairly? So that's a challenge that many of us will have to look out for.
That's the question. 6 prime assets. Which of them do you think is going to garner the strongest interest?
I think the atrium in Makati. So the government owns somewhere around 55% of the entire building, which translates to land value accretion. And if they're able to have an organized exit, they can maximize the land value returns on that asset. And that's like super prime.
Okay. Super prime. Can you tell us where is this, just so that people have an idea? Where is the atrium in Makati, and around how much might that fetch?
It's in front of the Ayala Triangle, and it should be just the land value alone where it sits.
Billions.
Should be about 7 to 10 billion.
7 to 10 billion.
Yeah,
okay.
Somewhere there.
Okay, so these are big ticket items. You expect the buyers to be the usual corporates and maybe partnering with foreigners. Because it's a chunky.
Yeah,
really
I think for one, interest rates are coming down. Number two, global sentiment seems to be improving. The property markets all around the world are pretty tough right now, but the Philippines is one of the better performing markets in the world. So many foreign funds are looking to come to Philippines, but they will only do it with the right partner.
All right.
So I'm quite confident and optimistic that government should get fair value. There's enough demand for it. And there'll be good reason for development.
Yeah, and the partnering with local and foreign will help offset a lot of the risk.
Yeah.
Because it's still very risky. David, might these transactions affect land values in Pasay, Taguig, Makati, where these properties are? What do you think?
It definitely should give it a boost up because there have been very few transactions in the last 5 years since COVID, and I do think that. If you use 100 as a baseline, many sellers are coming closer to 100. They used to be at 150. Many buyers are coming closer to 100. They used to be at 60, 70, and they're now coming back. So the gap between buyers and sellers are narrowing, and that's why transactions are coming back again.
And given the state of the economy, moderate growth, inflation well below expectations, expectations of rate cuts, and even more, we're in the middle of the BSP's easing cycle. Where is the property cycle today?
Yeah, I think it's in a very good, hopeful, optimistic situation because, well, too early to say, but some people feel that the worst is over because for the last 5 years we've seen demand grow.
Yeah.
For the last 5 years, this is the 2024 was the bottom of condominium mid-end buying in Metro Manila. In the last 7 months, you've seen a strong surge in buyer activity in the condo space. Again, partly because sellers are becoming realistic, buyers are taking up slack. So you're seeing a lot of transactions happening again.
Yeah.
And that's momentum. The BPO sector continues to grow despite all the issues about AI, about work from home. I just came from New York, and it's been an amazing transformation in New York, mainly because companies are being brought back to office. Many companies are going back to 4 days. By the end of this year, they will be 100% back at office.
Okay.
And so the retail traffic, the sanitation across the streets, across sidewalks is so much better. Retail traffic is so much better. Hotel occupancy, office occupancy. So the amount of commerce going through New York has been fantastic, and that's going to spread throughout the world.
Okay. You mentioned the BPO industry. It's one of the Philippines' biggest employers, and it's a backbone of our own office market.
Yeah.
But in the U.S., they're pushing a bill. They're looking to push a bill to require American firms to reshore call centers back home, back to the U.S. How disruptive will this be for the Philippines? Should it happen?
I don't think it will be an issue. This is not the first time. It won't be the last that governments are calling offshoring, but they have to remember that companies are offshoring for a very strong reason. The primary reason being that there is no labor back home.
Yeah.
Attrition rates in the Philippines for the call center industry, attrition is the amount of people leaving, quitting their job, is 50%. So can you imagine if you're running a company of 50,000 people and your attrition is 50%? That's kind of insane. But in the US and India, for example, the attrition rate is 120% a year, which means everyone you hire in January would be gone by October. So there's no labor. And if you try to bring them back, nobody's going to do this work. And if you do find it, they'll be at an extremely high cost.
So it's a lofty idea for the U.S.
It's going to be a tough. It's going to be tough for them.
Okay. Talking about our residential market, going back to us, mid-income condos are still being discounted, while luxury units are seeing an uptick in prices, and we're seeing more action in that development space. Yeah. How do you explain this split in demand?
Savings. The luxury sector has been battered in the 90s, battered in 2008. So they've got a lot of lessons and discipline in terms of fiscal management, meaning financial management. They've been very prudent. And then businesses are back. So in the last 5 years after COVID, most businesses have recovered from that, and they're spending again. And the other thing is the Magnificent Seven. So many investors from the Philippines have benefited from investing in Tesla, Microsoft, and all these so-called Magnificent Seven stocks. They've made money, and they're pouring it back in the Philippines in terms of real estate investments. And then, of course, you've got the usual corruption money that is being diverted from those projects into real estate. Yeah,
I was talking to some brokers, and they're saying, when is a good time for real estate? When people buy after elections and before elections? What are your thoughts on that?
Well, I guess for as long as infrastructure spending continues to grow, a lot of people benefit. There's a lot of money brought into the system, liquidity, that's all going to purchasing. So I think it's going to be okay. The luxury market is going to be okay, especially now the interest rates are coming down. It's giving more room for affordability.
Okay. Give us a temperature check. How are things in the commercial space, in the commercial area, vis-a-vis the residential area right now?
Commercial has always been very strong. From the lows in 2020, COVID, it's had a very strong pickup. So from less than 400,000 square meters in 2020, we're now touching 1.2 million this year, 2025. That's fantastic. And it's a very strong upswing in demand. The problem is supply. We're just flooded with office space. And as we said some time ago, we think 2025, 2026 will be the inflection point. So Bonifacio's out of the oversupply situation. Makati will be out of that oversupply by next year. Ortigas and the Bay probably have 5 more years. Alabang will be out in 2 or 3 years. So the demand is catching up to the supply.
Okay. What's ahead in the property pipeline that excites you? What's being built? What's exciting you?
I
What's
think
interesting now?
tourism is going to be fantastic. Despite the performance of the Philippine tourism sector in the last 5 years, despite how we've been managing it for the last 2 years, the demand for tourism is so strong globally. And if you're a business owner, that's a very simple and fantastic opportunity when there's demand. You just have to find a way to bring demand here. Okay, it's a very different problem when you have a demand problem, but the demand is very strong. What we have is a supply problem. We don't have enough roads, enough infrastructure.
It's really the infrastructure.
And infrastructure is not just roads. It's not just airports. It's sewage treatment. It is waste management. It's all these things. Security. Part of the reason why numbers are down is because of the recent kidnappings of Japanese nationals, Korean nationals, where the embassies had to
issue statements to their citizens.
And that's devastating for the tourism industry. But that's going to fade, and we'll get our act together again, and tourism numbers are going to be back. And again, like we have a program for government that we're proposing to government, where 50 by 2050, 50 million tourists by 2050. And as astronomically delusional that sounds today, because we're touching 5.5 million, I think, this year, we think that it's achievable in 25 years to hit 50 because the entire market is growing. And we can't just forever be missing out on that. And we've got a very strong recommendation to develop Palawan, Bohol, and Siargao, and rehabilitate the usual tourism spots like Cebu, Taal. Everyone takes Taal for granted, but it's one of the easiest.
It's beautiful,
one of the easiest. You just have to manage it properly, just like most of the country. And then, and Boracay, we have to rehabilitate Boracay. But it's exciting, really, really exciting. If you just focus and do the right thing in a handful of areas, I think the bang for buck will be tremendous for tourism. And that's going to be a way to offset whatever decimation some people think is going to happen to
From
the
external factors.
BPO sector.
Yeah.
Because, we've got this BPO sector is very strong. That's under threat right now by AI, according to a number of people. If they're right and that sector gets decimated, then at least we've got this one to bank on, to grow and bank on, to replace what we're going to lose in AI.
Tourism.
If those people are wrong and AI is not a negative for BPO, but it will contribute to the growth of BPO, which I think it will.
Hopefully we can. Hopefully we can spin it so that it helps grow our BPO industry, because AI, it's amazing, and it can unlock so much productivity.
Yeah.
That, coupled with Filipinos, can unlock so much potential.
And that's what's happening now. I mean, AI is still producing jobs for Philippines. It's taking some jobs, but it's creating more jobs as of now.
All right. That's all the time we have for now. David Leechiu, CEO of Leechiu Property Consultants, thank you so much for your time this morning.
Thanks, Mikey.